Have you ever thought to yourself and say, man, I can really use some extra funding right now to grow my business? Or maybe you needed to buy new equipment or hire your first employee. But every time the idea of getting a loan crosses your mind, you think about how difficult it is to get approved. And for some businesses, it can almost be impossible to get one. But I'm here to tell you, there's a loan designed specifically for small business owners that's backed by the government. It's called an SBA loan. I'm Anderson, please. I'm an enrolled agent and equipped with Pro Advisor at Infinity Tax. And in this video, I'm going to explain to you what an SBA loan is, the different type of loans they offer, and the requirement needed to qualify. And before we start, if you need help with bookkeeping and accounting services, click the link below or the link in bio for a free consultation with me and my team. And don't forget to like and subscribe to the channel, and thank you for tuning in. So let's start with this. What exactly is an SBA loan? An SBA loan comes from the Small Business Administration. It's a government agency that focuses on helping small businesses. The SBA does not lend you the money directly. They just provide a guarantee to the bank that you'll be getting the loan from. For example, let's say you walk into a bank and the bank is called First Street Bank, and you ask for a $100,000 business loan. The bank is going to look at you and think, okay, is this guy willing to pay me back, or can he pay me back? So then they'll make the decision to either accept or reject the loan, right? Or even give you a lower amount. That's where the SBA comes in. The SBA is going to tell the bank, hey, if this business default, we're going to guarantee to pay you back a percentage of that loan. So now the bank has a lower risk of losing their entire money, so they're more likely to lend to you. So the SBA doesn't give you the loan. The SBA gives the bank a guarantee, and it makes the bank say yes to small businesses that they would have originally turned away. These are the three most common SBA loans. The first SBA loan is the 7A loan. This one is the most popular one. You can use it for daily operation, for buying equipment, and even buying another business. It goes up to $5 million. And the repayment terms is usually 5 to 10 years and up to 25 years if you're using it to buy real estate. And the second one is the SBA 504 loan. This one is for bigger purchases like real estate or large equipment. The funding can actually go higher than $5 million, and you do have payment terms that are 10 to 25 years to pay it back. And the third one is an SBA microloan. This one is a smaller amount, up to $50,000. It's great for startup costs, inventory, or smaller equipment. The catch is you can't use it to buy real estate or pay off other debt. The repayment is usually up to 6 years. So think of it like this. If it's the 7A is your everyday workhorse, the 504 is for real estate, and the microloan is for getting started. Now, before you rush and apply, let's be honest about the good and the bad about the SBA loan, right? The good is the SBA loan have competitive interest rates compared to a lot of other financing companies. They're easier to qualify because the government backs them, and you get a longer repayment term, which will give you a lower monthly payment. Now, let's cover some of the cons about the SBA. You usually have to sign a personal guarantee. That means if your business can't pay it back, your personal asset are at risk. They usually ask for collateral. And the approval process is slower. The 7A can take 2 to 4 weeks, and the 504 can take 2 to 4 months. So an SBA loan is great, but there are some risks involved, which means you may be putting your business and sometimes your personal assets on the line. So what type of businesses the SBA usually fund? Your business has to be for profit. Non-profit usually don't qualify. 2, you have to operate in the US or its territories. And then 3, you must meet the SBA definition for a small business. That depends on your industry, your revenue, and how many employees you have employed. And 4, you need to have skin in the game. The SBA wants to see that you've invested your own money into the business. And then 5, you have to show that you can pay back the loan. They look at your financial projection, your revenue, and your credit history. And 6, you usually have to show that you couldn't get a loan somewhere else first. The SBA is meant to be a backup when regular banks turn you down. And this is where most business owners get stuck. To prove you can repay back the bank, they're going to look at your financial record and see if your books are a mess, right? If you can't show how much you actually make, this is exactly why I tell most business owners to get their bookkeeping clean before they go apply for a loan, right? Or an SBA loan. And plus, they will probably ask you for 2 years worth of tax return for your business. Now, let's take a look at how you can prepare so you can get one, right? First is your credit score. Most lenders want to see at least 650 for your credit score. It varies, but that's the general starting point. And then you have cash flow, right? They want to review how much money your business brings in and what is the projected to bring in the upcoming year. And then collateral. So sometimes it's required, especially for loan that's over $25,000. And personal guarantee. Personal guarantee is required from owners who own more than 20% of the business. Now for down payment, this is the one that you might need to budget for. You need usually about 10%, sometimes 30%. So if you're going to get a loan for $100,000, you need at at least $10,000 as a down payment before you can get the SBA loan. So if you're thinking about applying for one, start by getting your business books in order and also work on your credit and save for a down payment. Now, here's some advice that I have for you that can actually save you. So make sure you check your credit report for errors, right? You can do this for free. I've seen people find mistakes that were dragging their credit score by almost 100 points. So it's a quick fix. Make sure you do that because that could be the difference between getting approved or rejected. And another one to do is to shop around and see different lenders, because one might turn you down, right, for at this bank, but you can find another one from a different bank who's willing to accept you and give you the SBA. And another one is you can ask for the SBA Express loan. If you need $500,000 or less, this gets approved faster, and the trade-off is probably a higher interest rate. If it's not always the right call, right, you can always get another one. But and number 4 is read the term. Watch out for the guaranteed fees, the prepayment, the penalties, and anything else that's buried in the fine print. Here's what I want you to take from this video. An SBA loan will take your business to the next level if you really need it, but you will not get approved if your business finance are not ready, if you don't have the proper tax return done. And this is where I come in, right? At Infinity Tax, we offer bookkeeping and business tax preparation. So go ahead and click the link in bio for a free consultation, or the link below for a call with me and my team. Thank you for tuning in. Don't forget to like and subscribe to the channel, and see you next time. Thank you.